Awesome. Well, we're glad y'all are here and you're flexible. Honestly, we did a video in that front room, and this is going to be way better. It was stifling. I was so hot. My name's Willis, for those that don't know. I'm with Pure Funding. Gary and I started about 2 years ago. One of the reasons is because we had a lot of connections in agriculture and had no way to do any kind of loans with them. We could only do your traditional home loans, which we do. We do a lot of those, but we love agriculture. We love the people. We love going out and looking at land, which I'm sure y'all do too. That's why you're here. And so we started looking around for options to be able to broker out. So we're a broker, which means that we can do all kinds of stuff. We do residential, we do investment, and then we do ag. When we're looking at ag land, this is kind of our little kind of summary of the type of loans that we can do. There's basically two groups. One of them is kind of ag land that is for ag production, and then the other one is for hobby farms and rural residential loans. So we can do barndos, like true barndos. Barndo is something that as an industry I feel like we need to get a better definition on, because a lot of people when they say barndo, what they mean is a metal sided house. They want a stick-built house, they just want metal siding because they like the look of it. But a true traditional barndo was a house that had some kind of barn or shop in it. So you might have 40% of it is a shop and the 60% is the house. And coming this month, we are going to have a barndo construction loan, which is huge. Like most people, when it comes to building a barndo, everyone wants to do it, but there's very few lenders that can do it. And so we'll be able to have a one-time closed construction where they buy the land, they get their plans approved, they get their builder approved, and then it's a draw schedule that when they close, that pays off the land, then it goes through a draw schedule while they build the house, and then when they're done, it transfers into a 30-year mortgage at that point. So pretty neat thing coming along. But so when we're looking at this, the neat thing about this hobby farm loan right here, we'll just kind of start there and go through, and then if y'all have any questions or we want to kind of spitball some ideas and what people are doing, that's kind of how we like to teach these classes, to be really open. If you have questions while I'm going through, feel free to ask them. We have this as a guidebook, but we'll go off trail wherever we need to. So with the hobby farm loan, interesting thing is that majority of homes in our area that would fall into the hobby farm are, think anything that would have a loan over $766,000 and have more than 15 acres. When you get a house on anything more than 15 acres in this area, it's right under to right over $1 million. Would I say that's pretty accurate in this area? I mean, so you're going to have a lot of people that fall into that type of loan. The problem is that when you're dealing with jumbo lenders, which is anyone that's lending on over $766,000, they typically have a 10 or 15 acre maximum. So they won't do these type of loans. So you say, well, I'll go to one of the ag lenders, Lone Star Ag Credit or Ag Texas, one of those guys. They have a requirement that the majority of the value needs to be in the land, not in the house. But when you have a 3,000 square foot home on 20 acres, the value's in the house, right? So they can't do that type of loan either. That's where the hobby farm loan comes in. Think of 5,000 acre home on 35 acres in Brock, Texas. That's going to be a couple $1 million listing. It's going to have the majority of the value is going to be in the home. Now it might have cross fencing on it. It might have barns and everything else. We can do all of that with that type of loan. So it's a great product for getting people into something that is definitely residential, but has kind of that ag flair to it. Does anyone know what a hobby farm is? Sometimes I just presume that people understand that term, but it's a home where there's some kind of ag going on. They could be raising steers, they could be raising horses, they might be cutting coastal for hay production in this area. So it's some kind of ag production, but they're not making their living off of that ag production.
Does it have to be an ag exemption?
No.
Okay.
No. So ag exemption is really important for taxes, but it really doesn't have much to do with what we do. So, it might affect your debt to income ratio because you're having to deal with a higher tax bracket, or not a tax bracket, but a higher tax bill. But it's not, we care about what the appraiser says the property is, not what the county says the property is.
Obviously, that's subject to the individual that
Right.
files for it. But.
Yeah, exactly. So, sometimes people let it lapse, and that's just money out of their pocket. But as far as getting qualified, it's not an issue with getting qualified. So, but good question. So the second type, let me go over to the rural residential. Rural residential, really similar to the hobby farm. It's where we get probably most of our true barn does. Like, we were able on that program to qualify someone that had a metal building, like true metal building, and they had built apartment units, not units plural, but an apartment inside with no outside access and no windows. So that's...
Seems like jail.
Yeah, it does. But somebody wanted to buy it, and we were able to, through this program, do something like that. So with our traditional conventional lending, we're able to get your metal-sided homes approved. And what's also interesting is when you're talking about, actually I'll save that for a minute. Let's go over the last one. Last one's agribusiness and land loans. So when we're talking land, we're talking land with like a capital L, because like our minimum purchase price is about $550,000 to $600,000. So if they're coming in and they're wanting to buy a lot to build a house on, if they're going to build the house immediately, we can do that loan. But it's a one-time construction loan. It's not a land loan. But when we're talking about land where somebody is wanting to buy and they're wanting to have recreational hunting use, they want to raise cattle, they want to raise horses, they want to cut coastal, they want to start a vineyard. I'm still waiting for somebody to bring me a vineyard. So y'all start going down to Fredericksburg, get someone signed up, because I want to close a vineyard sometime this year.
Gotta go.
Y'all all go. Y'all find the investor. Yeah, exactly.
Right off.
Start knocking on doors. It's all write-off, right? So vineyards, almond farms, cotton farms. I mean, we can do all of those type of loans. Minimum loan, $500,000. That's why we have to have purchase price over $500,000. We can get some exceptions for a little bit under it, but if you're coming in with a purchase price of $450,000, it's not really something that we can do right now. We're looking for options. Like we said, we're a broker, so we can have different options. But so when you're thinking $550,000 purchase price and up, and when I say up, the loan can go up to $100 million. So sky's the limit on these. Get a really nice vineyard. Really nice vineyard. So, but that's the type of, so requirements on these loans, our rates are going to be probably 2 to 3% lower than any of the ag lenders, right? We're 30% down payment on those, and then the loan amount is what it is. The other thing on these that's really important is the appraisal is extremely important on these deals, because this is a commercial ag loan. When the appraisal comes in, it needs to say highest and best use agriculture, right? So that becomes a little bit more difficult when you're buying 50 acres down on Tin Top, because what's happening on Tin Top? Everything's getting subdivided. So we were able to get Kim's deal done, because they went in and they said, her buyer was definitely using it for agriculture. She's going to raise cutting horses there. She had a history of raising cutting horses. She had a business plan for raising cutting horses. And so we ran all of this by the appraiser beforehand, and they came in and said, yeah, I can see this property being used for the next 10 years for agriculture, but after 10 years, they might sell it and it's going to be subdivided at that point. And the reason is you have a rectangle lot, and of the 4 properties touching it, 2 of them had already been subdivided. So it gets a little sticky in some places in Parker County with that loan, but as long as somebody is truly doing it for an ag purpose and they can show the business plan for how they're going to use the land, we can get around that. But just so you know, like I said, it is a commercial loan. So you need to kind of prepare your buyers when they're buying these large tracts of land. It's going to be a commercial appraisal. Commercial appraisals start at around $2,500. So, which isn't as big of a gap. We had a house appraised out west of here, and it was $1,000 for the appraisal. But you know, it is a little bit more of a chunk. The nice thing about these loans, though, is we take them completely through underwriting. We make sure that they're going to get approved through underwriting, and that's when they order the appraisal. And so, and they talk, like in Kim's case, we talked to the appraiser beforehand and said, how are you going to classify this? Because we don't want our client spending $2,500 and then this not work. So we actually knew how that was going to happen before any money was spent. So we do as much as we can to minimize risk on that side of it. So one thing to know, probably need to write contracts on those for about 60 days out. Commercial appraisals take a long time. Turn time on a commercial appraisal can be 30 days in and of itself. So we could squeeze it into 45 if you really, really had to, but it would just be easier if we had that extra 15 days. And then if we close early, we close early. So just some tips on those. Any questions right now?
On your Barndo that you're working on, can you include a well?
Yeah, it would be all the construction.
Okay.
Yeah, it's just, so your plans get submitted, and a well, if it doesn't have water, needs to be one of those plans because they want to be able to drink something. So, yeah, for sure. Good. So it covers all the construction. And we also do a one-time close construction stick-built product as well. So we, those products, the one-time close construction outside of the Barndo, really you're looking, anyone trying to buy anything from like a small lot and going to build on it all the way up to a few acres. Once you go into the jumbo loans right now with where things are, now this is always changing, but with where rates are and lenders being less inclined to do jumbo loans, those rates for construction on those get really expensive. So you really want to keep the total loan below about 766. So at least for right now. Rates are coming down, which is the good news. So that's, eventually that will be across the board. Right now they're primarily on primary homes, not so much on investments and the other things. But even I think the other day I'm working on a refinance for some raw land in Palo Pinto County, and that's, I think, the rate that they quoted. Now, we're not allowed to lock until we get to the very end of the process on these deals, but on a 10-year ARM, I think it's 7.25%, which would be probably 9.5% with some of our competitors. So, yeah, it's really nice. So that's, we really are striving to be a good option for people in that. So, any other questions?
So the agribusiness land loan is, if you want to buy additional land in the future, that's pretty much the difference between that and
So the ag business loan is for if that's your primary income or one of them.
Not necessarily. I mean,
or it's more than.
it's more so Hobby Farm is a house. A house is on it.
oh, okay.
Yeah, Hobby Farm has a residential component to it. This is agribusiness. If it has to be raw land, and purchase price over $550. So, and so in this area, probably 50 acres and up. Now they do have a 10-acre minimum on it. So, We looked at doing a hydroponic farm the other day, and it didn't qualify because it was 8 acres, but they said it would have qualified if it was over 10. So,
We talked about something the other day, and it was
Mm-hmm.
a contract related as far as what would have to be on a farm and ranch contract and what could still be on a residential.
exactly.
So,
That was what I was going to pivot to. Good
Okay.
question. Great
Keep bringing
pivoting.
that up.
Yeah, yeah. So that's a question. Let's just say you have a home that is on 12 acres. Let's say 20 acres, and it has a home that's 2,000 square feet. Are you going to write a 1 to 4 unit contract on it? Or are you going to, and purchase price is $800,000. Are you going to write a 1 to 4 contract on it, or are you going to write a farm and ranch contract on it? Anyone else?
You write both.
Acreage isn't a requirement. So Fannie Mae and Freddie Mac don't have, and FHA for that matter, or VA, don't have acreage limits. Lenders have acreage limits. And we work with lenders that don't have acreage limits. So with 800,000, it's kind of in a funny place because the minimum any jumbo loan can put down is 10%. So if you tried to do it as a 10%, you're still below the conforming limits. So you're going to do a conventional loan on it. And because it doesn't have an acreage requirement, we can do that. We're doing one in Oklahoma right now. This just blows my mind. So one in Oklahoma, 160 acres, home on it, $450,000 purchase price as an FHA loan. So it's unfortunately, because lenders have this overlay, a lot of them have trained people to not think that you can do acreage because they can't. But you can do it conventionally. And that's a big thing to realize. It's a lot of freedom. It also helps your buyers get into much lower rates. You know, a hobby farm loan is probably going to be in the high 7s right now. A conventional, I just did a pre-approval, was 6.5. So, so there's some movement on that.
Where does somebody go if, let's say, minimum 10 acres, but they have 8 acres, where, from raw land, where do they go?
That they're wanting to buy 8 acres
Correct.
of raw land.
How do you,
You would probably you'd probably have to go to a local bank. So
local banks are for somebody that doesn't meet the minimum.
yeah, that's kind of under that $500,000 purchase price.
Gotcha.
And
Ask a similar question.
yeah, no, and we'll have people call us. Definitely have people call us, and we'll talk to them.
If it's close on the loan amount, let's say you're gonna be somewhere around, 550 on the purchase price, and they need 30% down, so 150, and it's 400 grand on it. I can at least call them and throw it out and let them make that decision.
Okay.
Because of these loans are very laborious from a commercial standpoint for the lender, and Farmer Mac, who is the underwriter, they can make that decision. So if
Right.
it looks good, we've got a good relationship with our investor, they might cut us a deal. If it's 450, 475, I'm almost positive I'll be able to make that work. So
Yeah.
just, if you got something that's
Yeah.
close, just run it by us and,
Yeah.
we'll say,
The-
and if not, then, it's, and if it's not ag, then you clearly have to go, you gotta go down to, one of the local banks in town or.
And it's definitely not a program for somebody that's going to buy it and then subdivide it. I mean, that's what puts most people out of this right now. Because you'll get all the people that are wanting to buy 20, 50 acres and subdivide it into 10 to 50 acre tract. No, wait, my math's wrong on that. But yeah. You know what I mean. Subdivide it into a few homes or pad sites. So,
I think the key is, like Willis was saying, it's the business aspect that's, so like Kate and Zach and I went out to the place up in Wise County, the processing facility.
a kill plant.
Yeah,
Mhm.
and, thank you. And that would be a slam dunk. Feedlot, out, you know, in the panhandle, or, you know, a dairy farm,
Mhm.
stuff like that is chicken houses, like, those are, you know, those sell quite often, so if you've got clients that are out there in that market looking to, those can get financed through this product.
Yep.
So, and I know, like, obviously, the fun stuff's more, vineyards and
Yeah.
things like that, but some of the things around here that you might run across would be in those kind of, you know, categories.
Well, and it doesn't have to make a ton of money either. It could be you're buying some acreage in Palapino County, and of 100 acres, 20 or 30 of it is coastal, and you can cut coastal hay. That counts for agriculture as well. In this area, the agriculture is going to typically be horses, livestock, coastal. There's not a lot of vineyards. There's not a lot of cotton production. There's really no agriculture. Yeah, there's no row crops in general here. I mean, you would have to go, and then you get into
Leesville County.
Yep, exactly. And in Stephenville, you have dairies as well. So if you have dairies that here's a thought process too. We can do cash out refis on a dairy. So somebody has a dairy operation, but they're wanting to buy something with you, but they don't have the down payment. We can go in and do a cash out refi and get equity out of their dairy, and then use that towards down payment on something else. So, or like I said, it doesn't have to be a dairy. Horse, insert agricultural business. So yeah.
We should have a
But
competition for who can bring you a vineyard.
we should.
God,
I'll
we
get
just
you
get
a-
one dropped, and we all just like scatter, and we're like,
I know.
like the
We
race
could
is
drive
on.
straight to Fredericksburg.
Yeah, we're going. We're going. We'll
Cut each other off on the highway.
Yeah, an RV, we can all go down.
Yeah.
Well, I know. And I wonder if a brewery would fall into that
If y'all
too.
all get in
It's
that RV, I can
agriculture.
put all y'all out at once.
We need to ask them. Yeah. Now I will
Keep the
say,
door locked.
I will say, as of right now, the one crop that they won't do is hemp and weed. So I know. So even with the hemp that has no THC, they won't do that product. So until laws change and things like that, it falls into its own
Like, no
classification. It's true. That's true. We're just growing weeds, not weed.
Yeah.
It's overgrown.
It's just overgrown. I don't know what's going on. So, but yeah, just make sure when you're looking at these properties to think outside that box. Like I said, 1 to 4 units will work in so many options. And sometimes what you're going to have to do is you're going to have to get us on the phone with the listing agent, because they won't believe you. They'll think, oh, they can't do this. Gary had to do that on a conversation a couple weeks ago on something where he had to get on with the listing agent and say, no, this works as a 1 to 4 with us. So, yeah. So I'm trying to think of anything else right now to kind of hit on. Do y'all know the difference between overlays and guidelines?
No.
So this is really important, actually, and it's important for your residential. It's important for VA, investment properties, whatever it is. Your guidelines are put in place by the backing institution. So that's Fannie Mae, Freddie Mac, FHA, VA. They put in guidelines. That's if a lender tells you no because of a guideline, you could take it to 20 other lenders and none of them can do it because the backing organization is saying no to that type of loan. Okay? An overlay is put on by the lender. And if you're talking to a lender and they say, hey, we can't do this loan, the first question to ask them is it a guideline or is it an overlay? Because if it's a guideline, you can't take it anywhere. But if it's an overlay, you can take it to another lender that doesn't have that overlay, and they can get the deal accomplished. So that's why we have very few overlays, if any. And so it's why we don't have an acreage overlay. We have some overlays on different loans, but they're very few, very far between. And so that's why we have a lot of flexibility in doing these type of loans. So when you're told no by a lender, like I said, the first question is asked, is it a guideline or is it an overlay? And then based on that, you'll know if the deal's dead or not. So really, really good thing to know. So
And even on the guideline, it's always good to kind of run it, because there are what they call non-QM loans.
Mhm.
And so if somebody does get declined because of a guideline, there are other loans. So like, for instance, bank statement loans
Mhm.
fall under that category. So you could get somebody who makes good amount of money, but they fail income. Obviously, you're gonna fail on DTI is what it's gonna, and so they're gonna miss on DTI. But if we look at it, they could go and then they'll have to pay higher.
Mhm.
The rate's gonna be higher because it's higher risk, but they would potentially qualify based on their bank statements versus traditional tax returns. So there's
Mhm.
like a self-employed individual obviously there, but, so there's certain things to Willis's point is when you ask those questions, it'll give you kind of another rabbit hole to go down to try to save the
Mhm.
deal. So,
for sure,
and
for
then
sure.
that's when you pick up the phone and call us.
Yeah, just give me a call. We figure it out. So, yeah. Or just start here. It's much easier.
Yeah.
Much easier on everyone. So, any other questions or thoughts? What kind of land deals are you seeing right now? What are you trying to put together? What roadblocks have you seen? How many have closed a land deal? Awesome. How many are wanting to close their first land deal?
Of 2024?
For sure, for sure. Awesome, awesome. What are some of the things that you've seen, the deals that have caused issues, heartache?
I don't think I've had any problems with land.
Have you done mostly cash buys?
That too.
Yeah, that's
That's why.
I've had a couple finance, but I don't think I've had any issues with those.
good, good.
The one I had was in Myra,
Mm-hmm.
and it was 4 acres or 5 acres, and it was a bank, but they wanted, they had a manufactured home on it.
Mm-hmm.
That was pretty hard.
Yeah.
A brand new build manufactured home.
I
Really?
did have one in Groesbeck. It was about 100 acres with a brick house, and it also had a mobile home that really just needed to go away.
Yeah.
I had the listing, buyer was financing through Chase,
Mm-hmm.
and their appraiser didn't include the trailer in the appraisal,
Oh.
but the bank wanted it on the appraisal. And I was like, it's like worth 15 cents. Who cares?
It's worth.
Virtual burn.
It's been burned down accidentally. No, just kidding. Yeah,
I will
that
personally haul it
no.
off.
we, as long as one house is bigger and can easily be seen as the primary, you can actually have. We can do 2 homes on it. We can do 3. I don't know if there's a limit on how many homes we can do. They just need to have one that definitely is easily seen as the primary. Not you have,
If it's conventional.
yeah, if it's conventional. Yeah,
I think the most you can have is 3 to use.
yeah. So, yeah. Awesome,
What
awesome.
about a house that needs to be rehabbed but on land?
How much land?
Well, I'm just making this up, so what you
Oh. When you're doing these programs, no. If the loan amount with the rehab is less than, does EPM have rehab with something that might have some acreage attached to it?
It's probably gonna get bounced if it's rural.
Yeah. Well, the fix and flip will like our fix and flip loan has to be in a home, in a town. The one I'm wondering about is with our, the 203K, or we have a renovation conventional loan. I just don't know that lenders,
Investor overlays, I don't
yeah, I don't know if that's a investor overlay that would keep that from happening or not.
Does that make,
I would just have to have enough value in the land that it's a land loan.
Mm-hmm.
or not enough value that you just keep it?
Mm-hmm.
This is like, 9 acres in Boyd in a house.
I thought you didn't have a place in mind.
Yeah.
Well, now,
Now I do. I mean, you can send me the listing and we'll just run it by them and see. But what you would, if that home was in town, what you would do is you would do a renovation loan if they're buying it as their primary property. Are they buying it as primary, or are they buying it as a investment?
Primary.
No pause at all.
Well, she's gonna flip it, I just don't know her
Oh.
time frame, so.
Well, the flip side, yeah, that flip, I mean, if she bought it and stayed in at least a year, then she could do a renovation loan potentially. So just send me the address and we can run it by them and see. The few renovation loans that we've done, which is basically a loan that covers the purchase of a property and gives you the money to renovate it up to 110% of after renovated value. So if you buy something that after renovated value is $500,000, you can get a loan up to $550 on it. It's a pretty neat little deal.
Who helps determine that after renovated value? Is that something that you work with the agent on?
Yeah,
As far
the
as-
agent, and then they have a team that puts it together. So now if you're doing investments, it's 75% after renovated value. Total loan has to stay below 75%. That's the fix and flip loan
Primary one
that we.
talking about?
Mhm. Yeah, the 110 is the primary. Gary was looking at me like I didn't know what I was talking about.
No, I was looking.
Fix and flip, so like, that's not what you said the other day.
Yeah, fix and flip is investment. That's something you're going to buy and it's going to be sold within 12 months. That's 75% after renovated value because in 12 months it's not going to appraise enough to go over that, so we don't want you losing money on the deal. So that kind of has some built-in protection there. The renovation loan is for somebody buying their primary home. And that where you see that a lot is there's two versions of the 203K loan. So your standard FHA loan, and this is getting a little off of land, but your standard FHA loan is called a 203B loan. 203K is their renovation loan. There's two different versions. There's one version where you're just getting $35,000 to fix up the house. If you're doing that, a lot less paperwork, a lot lower closing costs. You don't have to use a contractor. You can do the work yourself. You go over $35,000, you have to get, with FHA, you have to get a HUD consultant to sign off on the deal. That's like a $1,500 fee to the HUD consultant. You have to, there's just a bunch of hoops to jump through. So if the best way to use that loan is somebody is buying a property that won't go FHA because let's say it has foundation or roof issues, and you're going to get $35,000 to fix the foundation or the roof, because then you can do it as an FHA loan because you're fixing the issue that is keeping it from going FHA. So it's a good loan to have in your back pocket when your buyer can't qualify for anything in the area that actually could sell. So. Where's everyone at?
Here,
Bingo. What, Granbury office? Granbury, correct? Oh, you're Hudson Oaks, yeah. Stephenville, here in Hudson Oaks, here.
Weatherford, by
Weather-
Comanche.
Okay, nice. And you're in Granbury, and here. Are you Granbury?
I don't know.
I think you're Stephenville is where you're most of the time, but
She's wherever her
I know,
car is.
yeah, exactly. That's darn straight. So, oh, awesome. Gary's in the Stephenville office at least once a week. He or Denny is. Mark and I are usually here Tuesday through Thursday. Cell phones on those cards, so we can always be reached to answer any questions. Yeah. Any other one-off things that you've encountered, or things that we can kind of think through or talk through as a group to kind of help each other?
Be very careful of trust purchases.
Oh, yeah.
There's some scams going out there right now. That
Really?
Yeah, we just got hit by one, so.
Oh,
our
really?
clients. We're not sure who actually is the instigator.
Oh,
So
wow.
Just be careful.
So your clients were selling and the trust
No,
Oh.
I had a client who was buying
with his
with
trust?
trust money,
Mm-hmm.
and the check went insufficient funds
Oh, wow.
after closing.
Oh,
So it was like, title company, what were you doing
yeah.
with that check that we sent you a copy of?
Yeah.
And documentation for that they said it was okay to fund with?
Oh, wow.
Yeah, y'all, so it's a mess.
Oh, wow.
Yeah, it's a mess.
Somebody intercepted it. and took their
Well,
money.
you know, I can't say much more than that.
Yeah.
You know? But just be careful. I mean, that part in your heart that's got a little greed in it, you know, wants to go like, let's make this deal happen. And,
Yeah.
You know, or the trust, and I was around the people a little bit. I was like, man. And when that phone call came through last night,
Uh-huh.
the title,
Oh, Oh.
when it rang and Kim answered it, I went, and she said, this is, she had it on her speakerphone. I was like, oh my God.
for
I
sure.
just knew in my stomach that it was bad.
Yeah.
So,
Yeah. You know those phone calls.
yeah.
When they come at certain times, you're like, oh,
Yeah.
this isn't going to be
You're
good.
so anxious to sell something and
Yeah.
make somebody happy and get them what
Yep.
they want.
Yep.
Brand new home over in Burleson,
Oh, wow.
$650.
Oh, wow.
So it's a tough check to give back.
Yeah. Whew. Ouch.
Yeah.
It is.
Sorry, I already spent it.
Yeah. Yeah.
Check.
What check? I don't know what you're talking about. So, well, awesome. Awesome.